Costco Wholesale, founded in 1983, started as a bold idea: sell high-quality products in bulk at lower prices, exclusively to members. Fast forward 40 years, and Costco is the second-largest retailer in the world, with over 850 warehouses in 14 countries, serving nearly 125 million cardholders globally. This impressive reach has transformed Costco into a household name, not just for bulk shopping, but as a symbol of value and trust. What's the secret sauce? It's not just about selling products, it's about creating loyalty. Costco has mastered the art of value, reshaping how we shop for groceries, appliances, and even luxury goods. With a business model centered around membership fees, Costco has built an empire where customers pay to access discounts and keep coming back. This unique blend of quality, price, and customer experience has resulted in a remarkably high renewal rate for memberships, consistently hovering around 90%.
Now, let's dive into Costco's market position. At its core, Costco's business model breaks the mold. Unlike traditional retailers like Walmart and Sam's Club, Costco operates on razor-thin margins, focusing on efficiency to keep prices low. By making bulk purchases more affordable and offering quality goods at prices that are hard to beat, often under its private label, Kirkland Signature, Costco maintains a competitive edge. But how does Costco stack up against its competition? Walmart, with its vast product range and footprint, plays in the same league, but there's a key difference. Costco thrives on customer loyalty, driven by its membership model. This creates a sense of belonging among customers, who feel they are part of an exclusive club. Costco's revenue per warehouse far exceeds that of Sam's Club, thanks to its streamlined inventory and focus on fewer, better products. In fact, Kirkland Signature alone generates about 30% of Costco's sales. Costco's key advantage is its simple, no-frills approach that prioritizes savings over bells and whistles. They're not just selling products, they're selling trust. This approach fosters a community atmosphere, encouraging customers to return regularly, which is essential in an era where convenience and experience are paramount. However, as the retail landscape evolves, Costco will need to continuously innovate to keep this loyalty intact, possibly by enhancing customer engagement through personalized marketing strategies.
Let's look at the numbers, because they tell an incredible story of growth. Costco's total revenue has surged from $166 billion in 2020 to nearly $254 billion in 2023. That's a staggering increase of more than $87 billion in just 3 years, reflecting not just resilience, but a robust growth trajectory in a competitive market. Gross profit has climbed steadily too, $21.8 billion in 2020 to $31.7 billion in 2023. And net income? Costco's net income from continuing operations grew from $4 billion in 2020 to over $7.1 billion in 2023. These figures illustrate the strength of Costco's business model, where membership fees contribute significantly to its bottom line, providing a buffer against economic downturns. And let's not forget the shareholder value. Earnings per share, EPS, climbed from $9 in 2020 to $16.13 in 2023. Costco has delivered consistent returns quarter after quarter. Behind these impressive figures, there's a clear strategy at play. Costco keeps its operating expenses in check, with expenses growing at a slower rate than its revenue. This careful management of costs allows for sustainable growth and consistent reinvestment into the business. Breaking it down through a DuPont lens, Costco's profit margin, asset turnover, and leverage management tell a tale of efficiency. The profit margin reflects its ability to maintain a strong bottom line despite low prices, while asset turnover showcases how effectively Costco utilizes its resources to generate revenue. Lastly, prudent leverage management helps maintain a solid financial structure, ensuring that the company can navigate challenges without compromising stability.
Now every giant stumbles, and Costco is no exception. In 2023, it faced several controversies that rattled its reputation and highlighted potential weaknesses in its operational practices. In Taiwan, Costco was fined $12.5 million New Taiwan dollars for selling imported mixed berries that tested positive for hepatitis A. A significant blow, Costco was temporarily barred from selling the product in the country. This incident raised concerns not only about product quality, but also about the company's supplier vetting processes and its overall commitment to consumer safety. Meanwhile, a tragedy struck in South Korea when an employee collapsed and later died from heat stroke while working outdoors in high temperatures without proper breaks. This incident exposed serious gaps in Costco's labor practices and led to a public outcry. South Korea's Ministry of Employment and Labor fined the company, putting a global spotlight on its employee safety protocols and labor standards, which many customers expect to be exemplary. And in Australia, Costco paid $33,000 in penalties for mislabeling imported Canadian lobsters as Australian products. These events may seem isolated, but together they hint at systemic issues around oversight and compliance. They prompt a re-evaluation of Costco's supply chain management and quality assurance practices. Despite these controversies, Costco's financial performance and customer loyalty haven't wavered significantly. However, the question lingers: how much more can the brand take before it affects consumer trust? These incidents serve as a reminder that maintaining quality and safety is as crucial as pricing in sustaining a positive brand image. Addressing these concerns head-on with transparent communication and effective corrective measures could help reinforce consumer trust moving forward.
Costco's success story isn't just about warehouse shopping, it's about adapting to a changing world. While Costco has traditionally focused on driving customers into its physical warehouses, the rise of online shopping has forced a shift in strategy. Costco's online sales exploded during the pandemic, growing more in 2020 alone than in the previous 5 years combined. Partnerships with Instacart and Shipt have brought Costco into the homes of millions through same-day delivery services, effectively expanding its market reach. They've also expanded into the click-and-collect model in certain regions like Iceland, allowing customers to shop online and pick up their orders in-store, a hybrid approach that caters to diverse shopping preferences. But perhaps the real innovation lies in its private label, Kirkland Signature. This brand isn't just a discount alternative, it's a juggernaut, driving nearly 1/3 of Costco's sales. The strategy of co-branding with trusted manufacturers, think Starbucks, Duracell, and Ocean Spray, has given Kirkland a halo of quality, making it a preferred choice for many customers. The success of Kirkland reflects Costco's commitment to maintaining high standards while keeping prices competitive. Innovation doesn't always mean flashy tech. Sometimes it's about refining a proven formula, and that's exactly what Costco has done. The company's recent initiatives to enhance the shopping experience, like improving app functionality and expanding digital marketing, demonstrate its intent to remain relevant in an increasingly digital marketplace. Emphasizing customer feedback in future product lines could also foster further loyalty and engagement.
With all this success, you'd think Costco would be a risk-free investment. But there are challenges, big ones. First, there's the stock valuation. At a trailing PE ratio of 56, Costco is trading at a premium, even higher than Amazon's PE of 45. Investors are asking, is the stock price justified by its earnings? This premium valuation means that even a slight dip in performance could result in significant stock price adjustments. There's also the risk of market saturation. While Costco has been expanding its footprint across the US and internationally, it could hit a wall in growth. Adding warehouses in mid-size markets and internationally is a good move, but the question remains, how much more room is there for Costco to expand? Saturated markets may lead to reduced returns on investment, requiring Costco to rethink its growth strategies. Exploring partnerships for international expansion might mitigate some of these challenges. And then there's competition. Walmart, Amazon, and Sam's Club aren't standing still. They're pushing hard on convenience, online shopping, and delivery, all areas where Costco has been slower to adapt. With Amazon's robust logistics network and Walmart's aggressive e-commerce strategy, Costco must find ways to stay competitive in an increasingly crowded marketplace. Costco's ability to grow its membership base, maintain its operational efficiency, and navigate these risks will be critical for its long-term success. The company must remain vigilant in monitoring market trends and consumer preferences to sustain its competitive advantage.
So, where does this leave us? Costco is a retail powerhouse. Its financials are rock solid, customer loyalty is off the charts, and its Kirkland Signature brand is a shining example of private label success. However, there are storm clouds on the horizon, high stock valuations, recent controversies, and the challenge of staying competitive in an increasingly digital world. My take? Costco's future is bright, but not without challenges. It's a company built on efficiency and trust, but it will need to innovate faster and expand smarter to stay ahead. The key question is, can Costco continue to thrive without compromising on what made it great? Balancing growth with its core values will be essential as it navigates the complex landscape of modern retail. Thank you for your time, and now I'd love to hear your thoughts. What do you think Costco's biggest challenge is moving forward? Make the background music energetic.